Hey, crypto friends, my name is Garrett, and I'm a crypto day trader who loves helping others with their trading. And in today's Ultimate Bollinger Band crypto trading guide, I'm going to be showing you guys how to use the Bollinger Bands and how you can benefit from using them in your own trading strategy. And for those of you who would love to try out the same exchange that I use on a daily basis, feel free to go ahead and try out the Blowfin exchange here with the link in the video description down below this video. I personally love this exchange because they allow anybody from anywhere to be able to sign up and trade crypto futures. So if you are from the United States like I am and you want to trade crypto futures, you can do it right here on the Blowfin exchange. All right, guys. So when we're talking about Bollinger Bands, they're basically designed to measure momentum in the market or overall volatility. And they help traders identify potential reversal points, continuation patterns, and breakouts as well. All right. Pretty much the Bollinger Bands are a really good, useful tool for people who like to be able to spot breakouts. All right. So how do you go ahead and add these to your chart? That's the first thing I'm going to start here with. The first thing you want to do is you want to go to indicators up here on TradingView, and you just simply type in Bollinger Bands. Bollinger Bands. And it's going to be this one. All right. You want to click on the one that doesn't have any other weird wording next to it or anything like that. All right. Just Bollinger Bands, and that's it. And then it's going to add it to your chart. It's probably going to look a lot different than the way that I have mine showing up here on the chart. And the simple reason why is because I changed the look of mine so that it would be easier to see here on the camera. So yeah. All right, so once you have them added to your chart, the Bollinger Bands themselves basically consist of three different lines here, all right? We've got the middle band right here, which is my pink line right here, which is usually a 20-period simple moving average. And then we have got the upper band up here, which is basically made up of the middle band itself plus 2 times the standard deviation, all right? And then the lower band, which is made up from the middle band minus 2 times the standard deviation, all right? Now, you're probably a little confused by everything I just said, so to put it into simple terms, the middle band basically shows the current average price, and the upper band and lower bands expand and contract based on overall volatility, all right? So when volatility is extremely high, the bands basically get extremely wide, all right? And when volatility is low, the bands tighten up and they get really narrow and start to contract a lot. Now, a couple things that you want to be cognizant of with the Bollinger Bands is that when price action reaches the upper band, it usually suggests that it might be overbought, all right? Which is, you can see it right here. Let me go ahead and get my arrow. You can see that happening right in here, all right? But it typically suggests that the asset might be overbought at that given time. And when the price action type touches the bottom of the band, it suggests the opposite, and that it might be oversold, which is what you typically see, for instance, right in here or right in here, stuff like that, all right? So, however, something you should always want to keep in mind here, though, is that the Bollinger Bands, they do not tell you direction, okay? That is a very key thing to be cognizant of at all times. They do not tell you the direction. They just measure volatility, and that's it. So you want to always make sure to confirm your biases with price action or momentum indicators as well, okay? So now that we've got some basic information covered, we're going to go ahead and we're going to talk about a couple good strategies that you can use with the Bollinger Bands themselves, all right? So let me go ahead and get rid of these, and let's see here. All right, so the first strategy that I want to talk about here, these are very, very basic strategies, okay? And let me just tell you right off the bat that these strategies should be coupled with other layers of confirmation, okay? You should not be making your buy and sell decisions solely based on what these bands are telling you, and that's it, okay? But the first one I want to talk about here is the Bollinger Band squeeze, okay? Basically, when the bands squeeze together, like get really, really narrow and shit, when they squeeze together like that and they get narrow, it typically signals low volatility, and a strong breakout usually happens soon after, okay? For instance, you can see this right in here. This is a good example right in this section right here. You can clearly see that the bands got super narrow right there. And after they ended up getting super narrow, we had this insane volatile move down to the downside right there, as you can clearly see. Now, another spot where we can see that happening is, let's see here, right in here. The bands ended up getting super, super thin, and we ended up having a big move to the downside following that, all right? So that's kind of overall what I'm talking about here when I say that the bands squeeze together and they get narrow and they get and the volatility gets extremely low, and then it suddenly just breaks out of nowhere and goes either up big time or down big time. All right. Now, the best way to trade this type of squeeze is by watching the charts for extremely tight and narrow bands. Okay. You want to wait for a very strong breakout candle that closes outside of the band itself. And once this happens, you'll want to confirm the move with volume, because a significant spike in volume will validate that breakout as well. All right. So as you can clearly see here, this is a perfect example of what I'm talking about here. All right. So we've got this first bar that ended up coming down and out of the lower band right here. So you'd wait right there. Boom, there's your confirmation. And you can tell just by looking at the size of the bar itself that volume ended up growing right there big time. All right. So because that volume bar got pretty damn big, that tells you that the downward move is probably going to keep continuing downward. And that's exactly what happened for the next 1, 2, 3, pretty much 4 days after that. And we ended up going down pretty damn far. So if you were to have ended up opening up a short position right there, and riding it all the way down, maybe to right here. So you would have made a solid 10% without leverage. If you were using like 10% leverage right there within 4 or 5 days right there, you would have made about 100% profits right there. All right. So that is what I am talking about here as far as the Bollinger Bands narrow banded strategy. All right. Now, another strategy with the Bollinger Bands, I don't know why I struggle to say that word, but another strategy with the Bollinger Bands deals with mean reversion, okay, to profit from temporary overbought and oversold conditions. Now, how this works is prices often snap back to the middle band, which is the 20-period SMA, like I explained earlier, after touching one of the outer bands. All right. So if the price touches or jumps through the upper band, look for bearish reversal patterns to short it back down to the middle band. All right. And the same is true with the other direction too. When price ends up touching the bottom band, or when it touches the bottom band, you want to look for the price to go back up to the 20-period moving or 20-period simple moving average once again for a potential short-term long going upwards to that. All right. And now I know that this might all sound very, very easy to do, but the key here is to always wait for confirmation before entering trades. Okay. And it's no different with this specific strategy, because sometimes, like all indicators, the Bollinger Bands can give false signals. All right. They legitimately can. Most indicators like this usually give false signals from time to time, and price can run along the upper or lower bands for an extended period of time as well. And I'll show you an example of that also. All right. So here you can clearly see that the Bollinger Bands ran along the top edge here for a very long time. We go from there all the way up to here. So that's a matter of, let's see here, 1, 2, 3, 4, 5, 6, 7, 8. For 8 days, it ran along the upper band up here. All right. So that's kind of what I'm talking about here. So if you are seeing that the price is going up and out of the upper band here, don't start to open a short position right there. Okay. What you want to do is you want to wait for the next candle to open. All right. If the next candle continues higher, hey, stay in. The bullish momentum is still there. You do not want to short this. Next candle comes in. Boom. Same thing. You do not want to short this. All right. Next candle comes in. Yes, it came in a little bit lower than the previous candle, but overall it did not go down below the previous candle either. So that right there tells us that bullish momentum is still there. So still, you don't want to enter a short there. And then the next candle opens, boom, we go way big time up. Next candle, way big time up. And then boom, it starts to go up and up and up, and it starts to kind of ride it all the way up. Now, so you do not want to open up a short position just because the bar ends up going above the top or upper band on the moving average, or on the Bollinger Band here. Okay, so this is why it's insanely important to always check your biases with other levels of confirmation as well. Okay, this is extremely important because this kind of stuff happens on a regular basis, especially in times of very strong uptrends or very strong downtrends as well. Okay. So guys, now that I have shown you some super simple, solid strategies to use with the Bollinger Bands, now I want to talk about some common mistakes to avoid so that you do not end up making them like I personally did when I started to use the Bollinger Bands in the past, okay? Now, the first mistake that you want to avoid is assuming that there's going to be a reversal immediately after price touches the upper or lower band, like I was just explaining. All right, I cannot even tell you how many times I have personally made this mistake in the past. Okay, it's almost comical, but seriously though, keep in mind that price can and usually does ride along the upper or lower bands for an extended period of time before it usually does decide to reverse. Okay, especially in extremely strong uptrends or extremely strong downtrends. Okay. Now, another mistake that you want to avoid is ignoring overall market structure. Okay, you always want to consider the broader market structure and ask yourself things like, is the overall market in an uptrend or is it in a downtrend? And you want to think about these things before making any kind of decisions, because Bollinger Bands work a lot differently depending on the overall market depending on the overall market environment. Now, lastly, the last mistake that you want to avoid here is over trading in choppy markets, okay? Or trading at all in choppy markets whatsoever, because when the market is sideways, like most indicators, the Bollinger Bands can generate a shit ton, and I mean a shit ton of false signals and really, really mess with your decision-making abilities. So my tip to you guys with this one would be to be patient and selective with your biases. Be patient, be selective, and always, always, always use other layers of confirmation as well. Overall here though, the Bollinger Bands are an insanely good tool to use when you're in the learning stages of trading the crypto market and trying to build a strategy for yourself. They help you with recognizing when the market is about to move, identifying potential tops, bottoms, or breakouts, and they also help you to be able to adapt to both trending and ranging markets as well. However, just like any tool in the trading world, Bollinger Bands should not be used by themselves, like I was mentioning before, and you should never make your buy and sell decisions based solely on one indicator alone. Instead, you should combine it with stuff like, price action and volume analysis for much, much better results. All right. Now, guys, before I go ahead and wrap up this video, if you enjoyed this one and you feel like you got some decent value out of it, please be sure to go ahead and subscribe to the channel and hit the like button below the video. And hey, guys, with that said, thanks for watching.